This is Alan Bush with the Daily Financial Forecast for Thursday, October 20th. Stock index futures starting out a little bit lower as crude oil prices and other commodities coming under some pressure in the overnight trade. However, there has been a recovery with the new home sales report coming in stronger than expected. Overall, though, we do feel that the main trend is higher for stock index futures, and even when or if the Fed raises rates, whether it's in December or early next year, interest rates will still not be high enough to reverse this bull market for the stock index futures. Now, moving over to the currencies, seeing the euro currency under some pressure this after ECB President Mario Draghi making some dovish comments, although policies were unchanged in their statement. There was, though, a quick drop in the euro currency and a sudden rally in the dollar index based on Mario Draghi's comments. Longer term, though, we are now just turning neutral on the dollar, even though there are pretty good gains in the dollar index today. By no means are we bearish the dollar index. This is just a good time to get neutral, take some profits on longs. I think this may be as high as we get in the near term for the US dollar index. Over in the pound, seeing some pressure there, some negative economic numbers. Also seeing the commodity currencies a bit weaker with the crude oil lower, so the Canadian and the Australian dollars lower. A little extra pressure in the Australian dollar as employment numbers in Australia coming in a bit on the weak side. In fact, I think this is probably a good opportunity to come in to buy Australian dollars and sell the Canadian dollar, since we do think that China's economy will overperform the analysts' consensus estimate. That should be very much a positive to the Australian dollar relative to the Canadian dollar. So still looking for the Australian to gain on the Canadian dollar longer term. And in the interest rate futures markets, we are seeing prices higher with crude oil lower, stock indices a bit lower earlier, both being bullish factors for the credit markets. However, we still feel that the overriding influence is the inflation situation, although not much of a problem now. Ultimately will become more and more of an issue and a negative. So any gains in the bonds should be used as a selling opportunity. Still thinking that the bond trend is lower probably through the balance of this year, and I would think also well into next year. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.